Have you ever faced a situation when you needed urgent funds during a month end but had no sufficient fund in the account as your salary was yet to be credited? You wished you had not spent the entire salary and wondered if you could get the next salary in advance. It is not a rare situation. A lot of us have gone through this at least once in our lifetime. Let us hope you do not have to face such a situation again. But unfortunately, you come across it. Do not panic. There is a simple solution. Payday loan. It's basically payday loan. But now, does it work? And how does it differ from personal loan? Should you opt for a payday loan to get advance cash? Well, let us find out in this video what is exactly payday loans. Payday loan, also known as advance cash or single installment loan, is a small amount, unsecured and instantly approved loan offered for a shorter duration. Typically, until the borrower receives the next salary, it helps you fulfill your cash requirement until you get your next paycheck. It needs to be repaid in a single installment after you get your salary. The payday loans does not have any restriction on the end use of the loan amount. You can use it for any legitimate purposes such as buying home appliances, living expenses, jewelry, medical emergency, rent payment, housing loan EMI repayment, etc. The set small amount loan comes with an extremely high interest rate. If you lack financial discipline and do not manage your finance carefully, it could be difficult to repay the payday loan amount. The loan is appealing to salaried individuals despite its high interest rate because they can use this advance cash when they have already exhausted their salary at the beginning or middle of the month. Now we will see how does a payday loan work. You can apply for payday loan either online through the lender's official website, mobile application or offline by visiting the lender's nearest branch. The payday loan does not have strict eligibility criteria. You will be eligible with most lenders for a payday loan if you are an Indian citizen with at least rupees 10,000 net monthly salary. However, most banks in India offer this loan only to their salary account holders. Along with your loan application, you are required to submit your KYC documents like identity proof, example PAN card, Aadhaar card, etc. Also, you need to submit address proof like Aadhaar card, driving license, passport copy, etc. And also a recent photograph. You may also need to submit your recent salary slip as income proof if you do not hold a salary account with the lending bank. Many lenders do not check your credit score or do a soft credit check for a payday loan. Hence, the loan is disbursed instantly to your registered bank account, normally your salary account. This loan amount needs to be repaid on a pre-specified repayment date, which is typically after you get your next salary credited. Suppose you have some medical emergencies and need rupees 50,000 urgently. However, since it is almost a month end and you have already exhausted your last salary, you do not have a sufficient balance in your bank account. You avail a payday loan of rupees 50,000 today, that is 18th July 2022. Let us say your salary get credited on the 1st of every month. So you choose the repayment date as 2nd August 2022. Now you will have to repay the principal, that is rupees 50,000, and interest calculated for 16 days based on the interest offered by the lender. On 2nd August 2022, since most lenders offer the loan to their salary account holders, the amount will get automatically deducted from your account on the repayment date. You need to ensure you maintain a sufficient balance in the registered account on the installment date. Not being able to make the repayment on promised date due for any reason will attract a high penalty and other charges. Besides, it will negatively impact your credit score. Once the loan is repaid, your account or your loan account will instantly get closed. Now we will examine what is the main difference between a payday loan and a personal loan. Most people get confused between these two loans because both of these unsecured loans that do not have any end use restrictions as far as the loan is used for a legitimate purposes. Also, payday loan and personal loan may sound similar, but they have several differences. First difference, loan tenure. The major difference between a payday loan and a personal loan is the repayment tenure. As discussed, payday loan is a single installment loan, meaning that the entire loan amount, that is principal amount plus interest, needs to be repaid in a single installment on a pre-specified repayment date, which is typically after you receive your next paycheck. Whereas in the case of a personal loan, the repayment is made over a short or a long tenure, which could be from year to 5 years. In exceptional cases, some lenders even offer personal loan for up to 7 years. Second difference, loan amount. A payday loan is small amount loan that may start from rupees 2000 to the extent of rupees 2 lakh. If you are looking for a high amount loan, you will have to consider the other borrowing options such as personal loan that can offer loan from rupees 30,000 up to 50 lakhs like that. Now we will see rate of interest. A personal loan is known for its high rate of interest compared to secured loan like a car loan, home loan, loan against properties, etc. Since the number of personal loan providers has increased, nowadays the interest rates are competitive. However, the rate of interest of a payday loan is even higher than a personal loan, thus making it a bit costlier loan. If it is not used carefully or repaid on or before the due date, it can put you in a debt trap that comes difficult to come out later. Now we will see the loan approval procedure. Personal loan approval can take from 24 hours to 7 days for the loan approval process, depending on your profile and lender's terms and conditions. Whereas a payday loan has a quick loan approval and dispersal process as the verification and assessments are speedy. However, nowadays many banks and NBFCs provide instant personal loans. These loans are offered on a pre-approved basis and can be availed in less than 10 minutes to 24 hours, depending upon the lender. Since you are already eligible for these loans, there are chances that you will get the loan at an attractive interest rate. Therefore, before opting for any loan during an emergency, it makes sense to first check if you have any pre-approved offers. Now we will examine cost of loan. The payday loan generally comes with a high processing fee, late payment fees, etc. compared to a personal loan. Besides, if you are unable to repay the loan on time, it can accumulate very high interest rate, attract several other charges, and the loan becomes challenging to repay. Whereas, due to the increased competition, many banks and NBFCs often offer discount on the processing fees of a personal loan. As you might have realized, the payday loan can be very beneficial in case of emergencies. However, it is a costly loan as it comes with a very high interest rate and other charges. Not using the loan carefully or missing the repayment date can increase the dues and make you fall into a deep. Therefore, it is not advisable to opt for a payday loan unless it is an emergency and there is no other way out. Instead of paying a huge interest amount, it makes sense to check for a pre-approved personal loan offer or temporarily borrow from your family members and friends. With this, I come to end of this presentation. Once again, thanks for your time to watch this video. Don't forget to subscribe this channel, share this video and like this video also. I have posted many interesting videos related to investments, finance, etc. on my YouTube channel. Do have a look at those. Look forward to catching up you next time with another exciting video. Thank you very much for watching this video.